Live recording from Long Island, New York. It is Thursday Night Stock Charts Live. What are we going to talk about tonight? The debt ceiling, yield curve, uh, stock market, Tesla, Netflix. We have a lot to go over. Nothing really too complicated, just a lot of stuff that I think the most interesting thing is going to be valuation of the market. You know, if you have an idea of whether or not you think that the market is more expensive or less expensive than what it was on, I should say, overvalued or undervalued as measured by the Buffett indicator, put a comment in the box and let me know. But first, take a look at the S&P 500. Take a look at the chart. Are we up? Are we down? Uh, and go back to Sunday night. Sunday night when we discussed how valued the market was. And at that point in time, we were fairly valued according to the Buffett indicator. So take a guess and say overvalued or undervalued relative to Sunday. I'm so tired. Jody, hello. The lovely Jody. Franklin, welcome. All right, let's get to it. Alex, I know people are going to slowly drift in here. So I'm going to get to it. Just talk about a couple of housekeeping things for new folks that are out there. New folks, we do the 30-minute chart club each Saturday. We had 3 of them. Chipotle Mexican Grill. Let's check out how we did. And we traded one of them. Broadcom. BRCM was one. Oh, I keep doing this. They changed the symbol. Vago. That is up on the week by over 2%. We were higher here. BRCM, actually, I keep doing that. AVG, we already did that. What was the other one? CMG. That is higher on the week, nearly 3.5%, near the highs of the week. What else? Google. That is down on the week. How did we open up the week? Because the chart was looking good. But then I said I wanted to short it on strength. So when was Monday? Monday was the 17th. I can't believe it's the 20th. All right, so oh no, we didn't nail it. I was bad. Initially, I wanted to short it, but I said, you know what? I think it's going to go up higher. So I want to get long of it and then short it, but I misdiagnosed, but this could go higher. What else are we looking at? Let's go back here. I think they save. No, they didn't save it for me. I forgot the other one that we had up. But overall, we did good. We traded Broadcom actually twice. Book profits yesterday. Actually, yeah, book profits yesterday, re-entered yesterday afternoon. It rallied. We added more today, but that kind of came back to bite me. All right, let's I'm not sharing my screen. That would be nice. Thanks, Franklin. Appreciate it, brother. All right. Yeah. So that was not intentional. Share screen. All right. So for the new folks that are here, don't know what we do. Thanks for being here. 30-minute chart club. We take a look at the 30-minute closing charts on Saturday, see what's setting up nicely. And we add it to our chart list to possibly trade as we did with Broadcom this week. And we'll be meeting on, I believe it's 2:00 on Saturday. It's a private live stream. I keep it private to stay focused on, especially for new people, on the topic. You can ask questions. And we also avoid spam. Sometimes we get spam on the public live streams. Also, if you're new to trading or you're new to technical analysis, my 5-part video tutorial, my top 5 favorite candlestick patterns, link below, free. Both of these are free to you. Link below. Let's get to it. And let's start off with some humor as we wait for people to populate in here. So we're going to be going into the debt ceiling, and it's going to require courage of the Republicans, of which there's a growing amount of patriotism, but usually it's out of the likes of Marjorie Taylor Greene. And I know a lot of people don't like her, but I do. So let's hear what Marjorie has to say. This is Swalwell, Eric Swalwell, who had an affair with a Chinese spy. Everybody knows about it. So let's check this out.
Our rhetoric and to denounce anti-Semitism and anti-police rhetoric in this country. Jewish Americans and police officers can be safer.
Congressman, I do.
Thank you, and I yield back.
The gentleman yields, and now I recognize the gentlelady from Georgia, Ms. Green.
That was quite entertaining from someone that had a sexual relationship with a Chinese spy, and everyone knows it. But
I move to take her words down.
I could watch that another 5 times. Awesome energy. It's a type of energy that the Republicans are lacking, but they better get with it. So I find that very, very humorous. I applaud it, and I want more. Hi, Jody. Yeah. So I'm trying to settle it down to a standard time. I may add more sessions, but right now it seems that Saturday, 2 p.m., because I do the weekend commentary. I have to record that, go to the gym, edit that, then do this. So, and it usually ends up at about 2 o'clock. So, yeah, usually 2 o'clock. But I, of course, send out email alerts. Okay, so on the week so far, we've had earnings come out of the majors: Bank of America, Goldman Sachs, J&J. Lockheed Martin reported. How did they do? I forgot to trade their earnings. They pulled back. But their chart is on fire. Netflix. Their cash flow, free cash flow, is outstanding. But otherwise, their earnings were not wonderful. Not for a growth company. Last night, we had Tesla. Now, we traded Netflix on earnings. We made good money there. I did not trade Tesla. We like to sell premium, like to sell options. They weren't paying us the premiums. We needed to take the risk. We walked away. I'm happy we did. We were also short of Tesla premium going into earnings. We took all that risk off the table in advance of the earnings report because we wanted to be flat. Now, I was short of the 160 puts. Guess what got tagged today? What was the low of the day today on Tesla? The low of the day was 160.56. So I would have those puts under a lot of pressure right now. What we did is just after the open, we allowed for a little bit of price discovery on Tesla. We found a little bit of a bottom anyway. Ultimately, it did not hold up. So we sold one tranche of 125. I forget the strike price of the, I know the strike price, 125. I forget the expiration. Franklin, if you remember, can you top it? It was May the 26th or June? I forget. And then we opened up another tranche to the put side. So we are now long again of Tesla, but using naked puts. And I also put on a common stock position today, carried that overnight. I'm hoping for more pressure on Tesla tomorrow so I can get a bigger position and sell a rip. There's ultimately going to be a rip here, and we'll exit stage right on that rip up higher. But what we're going to do is the position that we put on today, forget about the common stock, take that out of the equation. It's a short-term swing trade. We sold puts with the intention of when we get a rally, which is going to come, when we get that rally, we're going to sell twice as many calls against those puts. So then we're going to have a ratio strangle, which is more bearish on Tesla. I think it's dead money for the next 3 months. A good trading vehicle still, but it's dead money. We sold premium, and I think we're going to do very, very well. Larry, market risk feels high. Yes. What sector do you trust? Banks? Definitely not the banks. REITs? No, I don't trust the REITs at all because you have, Franklin. Thank you, Franklin. 6.2. 6.2. That's the strike price on the Tesla puts. And once we get a rally in Tesla, we're going to sell calls into strength. And sorry, I have a cold. And set up a strangle. Basically, slightly bearish, more bearish, but mostly neutral with a slight tinge to the bear camp. So back to Larry. Really good questions. So bank stocks, we're going to go over this in a moment, but you take a look at names like, let's just go to the banking sector as a whole. Now, it's really overbought. We were talking about this last night on Market Wrap, and I was saying, the banks have come a long way here, and I'm going to skip to this right now. Since you brought it up, Larry, I think it's a great segue, is U.S. Oh, this is the wrong one. Where is it? Here. We talked about this a few weeks ago. Bank bailout facility usage rises for the first time since SVB. Money market fund outflows soar. So we're beginning to see more of the banking sector leaning on the Federal Reserve for a lifeline. So we already went over this a couple of weeks ago, saying, you know what? It took a year when we're going over the timeline of the great financial crisis. You had Bear Stearns, which really kicked it off, a couple of smaller banks first. Then every few months, you'd have another thing blow up. Then you had Lehman. It was just like everything that was a final straw on the back of the camel. So I don't think that the banks are done here. I think that they've had a nice short covering rally and that it's time not to get aggressively short of the banks, but I think we could scalp short. Now, here's the XLF. You can see that we came very, very far. We tapped my resistance bands on Stokes. You're going to have the 50-day moving average cross down below the 200-day moving average. So despite the technical rally, overall, this is a technical basket case. Let's take a look at a weekly chart. I don't like it. I think that this is a dead cat bounce and that there's a very good chance that we roll over. Do we break down to new lower lows? I don't know. I'm not that smart, but I think that we are going to pull back. We're going to, at a bare minimum, put in a higher low, and we'll see whether or not we take out prior lows on the banks. But you can bet your bottom dollar that if we take out the lows of March, the rest of the market's going to be falling along with it. Pardon my sniffles here, folks. Your view on GMDA just got FDA approval. I'm not good with FDA approvals and whatnot, but we can take a look at the chart in a little while for you. Gold shares in trouble. Tom, no, I think it's an opportunity, to be honest with you. I think it's a normal correction that came so far so fast. Gold itself, if you're referencing gold, I think it's setting up for a continuation breakout. The mining stocks, sure. Might you get a bit of more of a pullback? Yeah, but they're more volatile than what gold is. So I think that this is an opportunity. If you're not long the gold stocks, this is the time where you begin to nibble. If you are long already and you already have a full position and you want to add more, I think you can wait here a little bit more. We're going to go over the charts in a little while, so stick around. Okay, let's move on. Earlier, I talked about, okay, what earnings come out tomorrow? Nothing. Nothing after hours today that's worthwhile. Nothing. All right, economic data. I'm going to skip this because I have the headlines up here, and it is no bueno. All right, the Buffett indicator. I asked this earlier. If anybody thought that we were more expensive or overvalued as measured by the Buffett indicator or undervalued relative to Sunday night. Remember, Sunday night, we were undervalued on the Buffett indicator. Tonight, we're overvalued. So one might think that I'm looking at this article. I don't know what this is. I know they retarget you. Very attractive legs, really, but I don't know what this is. So I don't know what that is. I used Hertz recently down in Florida, but not quite sure what this is. Great legs, though. Anyway, I digress. You must be saying, oh, the stock market must have went up. No. The stock market is down on the week. Yet, equities relative to Sunday night are now more expensive. Why? Earnings. They're not wonderful. Absent the Tesla free cash flow, absent the free cash flow beat on Netflix, earnings are not great. Tesla, not great. Their margins were crushed. If you want to know what killed Tesla today, it was the margins. I said it last night on Market Wrap that their margins were horrible. So if they keep cutting costs, you're going to see Tesla really plummet, really plummet. They've already cut costs 6 times already in the United States alone. So we remain expensive. Schiller PE ratio, we're near 30. Folks, we're 13% off of S&P highs, yet we're still near 30 on a PE ratio. What's the norm? 17. Fed's balance sheet continues to decrease. So this adds pressure to equities because they want to see the Federal Reserve riding to the rescue. They're not getting it. But I'll show you a chart in a moment that may indicate that the bond market is beginning to price in more of an accommodative Fed, which is one of the reasons why I didn't go adding more to shorts today. All right, so we have now entered that time of year where we get these lizard people that come out and they say, oh, we need more money because we blew through the last credit card that we had. We can't account for it, but we need to raise our credit limit so we get the next budget push through. So this is a game that gets played. Grandma's going to get thrown out on the streets. Medicare is going to freeze up. We're not going to pay our debt, blah, 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 blah. All they do is close the national parks. That's all they do. So either way, despite the irrational behavior out of the politicians and the ultimate, what's the phrase? Self-fulfilling prophecy that they must raise the debt ceiling, the stock market gets nervous that they won't. And you could bet your bottom dollar that if they play chicken, which I bet that they will, the stock market's going to feel a lot of pressure because the lizard people on the Democrat side are completely oblivious to Keynesian economics. They don't care. They know they have a credit card. They're going to print money. They will drive this economy off the cliff to prove that they can print money. Whereas you have on the Republican lizard person side, you have the Mitt Romneys, you have the out of South Carolina, Lindsey Graham out of South Carolina. Those lizard people, they just want their goodies. They want to make sure that the mechanisms of government are well oiled. And then you have your Marjorie Taylor Greens, your Matt Getzes, and they are going to throw wrenches into everybody's cogs this time around. I'm very, very confident of it. The question is, are there enough of them to finally bring fiscal discipline to Washington? I think the answer is no. We get a debt ceiling increase, and the Republicans buckle as usual. They're going to say we're going to wait for 2024. Rah rah rah. We're going to flip the House. We're going to flip the Senate, capture the White House. Don't worry, Republicans. Donate to the RNC. Don't give your money to Trump. Don't give your money to anybody else but the RNC. Even though we are corrupt and incompetent, don't give the Republican National Committee one single penny until they earn it. And they are nowhere there yet. We can listen to what they say, but we need to watch what they do. And they do nothing but undermine us. We went over this. Silver demand sets records in every category in 2022. We own silver. We are long of it. We own silver mining stocks. The however is they trade along with gold stocks, not with silver. Silver was up yesterday. I'm not sure what it did today. That's in our long-term portfolio. And I try not to look at that as much. It was down slightly today. But silver on the year, what are we up on the year so far? We own a leveraged ETF up 5.25%. But our AGQ, which is what we own, 6.53%. So a good year so far on, look at this chart. This just wants to go. Yearly chart. So silver, looking good. Why do you need silver? Why do you need gold? Leading economic indicators tumble for the 12th straight month, signal imminent recession. Can anybody say stagflation? Stagflation. Stagnant growth, or in this case, no growth, a contraction in the economy, yet inflation is moving up higher. What's that the perfect storm for? You guessed it, silver and gold. U.S. existing home sales resumed slide in March. Home price drops most in a decade. So home prices are coming in. Yes, that is somewhat deflationary. The however is yields have risen, and that is still preventing people from affording homes. Home prices need to drop a lot more. And even if they do drop a lot more and yields rise, it's going to offset the decline in home values. So people, this new generation, this Gen Z generation, they're not able to afford homes. Philadelphia Fed survey. This is from Philly Fed. Business survey, unexpectedly. We come on here twice a week live, and I point out what a disaster this economy is. Right? I'm recording out of my house on a webcam and a fairly inexpensive speaker, a microphone. These guys can't guess this. I mean, it's ridiculous. How many times I got to talk about the yield curve? Philly Fed business survey unexpectedly slumps to worst since Lehman Brothers. No joke. Let's take a look. What's the yield curve been telling us? We broke out. We broke out last month. Not this month, last month. It's incredible. The number of Americans claiming jobless benefits hits 17-month high. So that jobs picture that the government is trying to portray as being, the greatest economy in the world. We've created more jobs. No, people came back to work after COVID. You communist losers. They came back to work after COVID. Not everybody did. A lot of people just said, I'm not going to come back to work. So jobless claims are picking up, layoffs picking up. So the economy is going down. And it doesn't make me happy to say that. It really doesn't. The reason why that you may catch like a giddiness in my voice is because we knew about it well over a year ago. We positioned for it, and we're ready for it now. So that's why we use the charts. That's why we follow the economic data and also validate the economic data relative to the charts. When I hear that inflation is pulling in, and then on Sunday nights, I go through all the agriculture, cattle, metals prices, both industrial and precious metals, and I see, wait a minute, they're going up or staying flat. Those are input costs. Yet the talking heads are telling me, and the government's telling me, that inflation's contracting. I don't think so. It may have taken a pause, but the trend is still very, very positive. Oh, so this is basically what I was saying earlier. Mispricings are everywhere as we enter stagflation light. Forget about stagflation light. I didn't read this. I just want to take a quick peek here. All right, not much really to talk about here. A little bit of historical data. I'll share this out. I kind of like this data. That's in the chat box. TZ Burton, how dare you? Thanks for being here. TZ Burton, welcome. Mark McDermott, stagflation is here to stay for a while, Bob. Yeah, unfortunately, I agree. I agree. It's a tax on the people. It's a tax on the people. What else do we have here? I think that we are good. Let's take a look at the weekly charts and how we're poised to close out the week. Because one of the primary reasons that we meet here on Thursday night is that my head is already, we're closing our books on the week, right? There's not much else to do. We'll probably do a little bit of Tesla trading. Tomorrow meeting, I'm going to look to sell some premium going out into June the 2nd. Thanks again, Franklin. Sell some premium, generate some cash flow. And other than that, not much else. Now what we want to do is say, okay, we know, I already went over a bunch of articles that are telling you that there's a lot of catalysts out there that are not good for the economy. So the goal right here, right now, you got it, Jody. The goal right here, right now, is to not make a decision as to whether or not we want to buy stocks or we want to short stocks. That's an even bigger decision than buying stocks because the odds are against you. What we want to do is say, okay, if this happens, then I'll do that. And we want to think about how we're poised to close out the week. And late tomorrow afternoon, forget about what happens in the morning or in the mid-afternoon. You worry about how the market closes. I always like to say, don't worry about what the market trades intraday. What matters is how it closes. And the same holds true if you're a longer term trader. It doesn't matter what happens intra-week. What matters is how the week closes, right? You're trading the longer term trend. Being swing traders, we're focused on the weekly and the daily trend. So that's what we're doing right now. And as I take a look at the 10-year yield, we predicted that it would break out. It did break out, or it has broken out. I think I just butchered the English language. Did break out. Is that proper English? I got to think about that. So now we're up against yet another resistance level here on equities. Now, why does this matter for those that are new to trading or you're not into economics at all? You're into charts a little bit. Why does it matter? It's important to know why this matters. You need to know what sectors do well in a rising interest rate environment, what sectors could stand up to certain interest rates, what sectors have a breaking point at a certain interest rate. Case in point, technology, semiconductors. You get above 4%, pressure hits them. They're growth stocks. They need cheap money. So if their cost of borrowing goes up, guess what happens? Exactly what happened to Tesla. Their margins come under pressure. Nothing worse for a technology company, and in particular, semiconductor names, is margin contraction. Margins are everything. So if the yield breaks out, that puts the technology stocks under the microscope. That's why we watch it. We know the inverse correlations, and that's how we get our edge. So, what are yields telling us about how we're closing out the week and how we're setting up for the following week? Because that would help us decide, hey, I may need to look to add the shorts here, get aggressively short. Well, we're up on the week by over a half percentage point, but we're off the highs of the week. And we have resistance above, and the 20-period moving average in green is acting as resistance. So indecisive. So what I want to do is say, okay, what did they do today? How did they react today? Not good. Economic data was not good, has not been good. So yields are not pricing in growth today anyway. But this is not a broken chart. We've had a strong rally. Now we've pulled back. We're holding the 200-period moving average. Both the 50-day and the 200-period moving averages are rising. The path of least resistance remains higher for yields. That is bearish equities, but not right now. Not right now. We don't want to go trading off of that. We just want to watch, do we break out on a weekly time frame? If we do break out and we start to probe before handle 4.1, 4.3, then I get worried about technology stocks. Right now, we're just watching and taking notes. That's it. TLT. This is the 20-year bond ETF. Now, this wasn't looking good earlier in the week. And you may be saying to yourself, it's down on the week. What are you talking about? It's still bad. Not really. All down weeks are not made equal. All down days are not made equal. Right? So were you to tell me, listen, Bob, we're down on the week. We're trading at the lows of the week. We're down below the 20-period moving average. You know what? This is a dog. It's probably going to head lower. I would probably agree with you. But what we're looking at right now is a candlestick that's well off the lows of the week. Yeah, it's still trading down below the 20-period moving average. The however is that we have some buyers, daily chart. And what did they do today? They gapped it up. They gapped it up. Well, it closed yesterday at the 50-period moving average. They gapped it up above the 200-period moving average. So where we're at right now is an inflection point. Only one of these two can win. Only one can go up for any length of time. When bonds go down, yields go up, and vice versa. So one of them has to win. They're in a death match right now. If yields win and they break out, stocks lose. If bonds rally, yields drop, stocks win. So we don't know who the winner is going to be. And I say this not for the purpose of being self-defacing. When I look at a chart, I hate when people come on YouTube and they say, I'm looking at the chart, this is exactly what's going to happen. They have no idea. They may know the probability. Could be 50-50, could be 64. They have a probability. But you don't know. This is not a crystal ball. And I've been doing this a long time. I'm looking at this chart. Nothing's going to shock me here. I think that if economic data continues to roll in as poorly as it is, and inflation remains at where it is, slightly down, maybe even slightly up, I think the Fed pauses. I think that they're going to condition the American people for high inflation. I think that what they're going to do is, and I said this a number of months ago, and I kind of forgot about it. I just put it in the back filing cabinet of my head. And last night I'm reading an article, I think it was on Zero Hedge, how that lizard person out of the Eurozone, Ursula van the one who threatened Italy if their citizens vote wrong and vote in Angela Meloni, there'll be consequences. This communist, she basically said, get ready for a raising of the inflation target. Right now, our rate here in the United States, the target is 2%. Expect 3%, 4%, probably 3%. And they're going to condition us for that. Because unless they jack up interest rates above the rate of inflation, they will never, ever, ever break the back of inflation. Break the back of inflation. They're not going to cut spending. We're building aircraft carriers and destroyers for a war that they'll never fight in. That's where our money is going right now. We have aircraft carriers and multi-billion-dollar destroyers that can't enter the South China Sea in time of war because of hypersonic missiles. They're fighting the wrong war. They're spending this money. It's all pork. They've got to cut the spending in Washington. And unfortunately, it's not going to happen for quite a while. So there needs to be regime change. Until then, higher inflation is here to stay. The tip market. We own these. We're down slightly on the week, but we bounced off of support. We have capital parked in here because I want to buy emerging markets, which we're going to go to in a moment, but I don't want to do it because of the dollar. And I'm going to go to the dollar in a minute. So rather than park the money, our capital in a money market account, I have it parked in tips right now. That's to protect it from inflation, because tips, you get paid a yield of over 5.5%. Plus, when they rally, you're getting paid net asset appreciation. So it's a good place to park capital while you're waiting to put it to work. Now, I mentioned the dollar. Now, the dollar's been under a lot of pressure. And you think about it, and I've said this over the past couple of weeks, beware these guys on YouTube that are talking about how the dollar is going to crash tomorrow. It's going to crash next week. It's already crashed. Stop it. Stop it. Stop it. I go back to this analogy time and time again. The Chinese yuan, which everybody's afraid is going to replace the US dollar, is used in international transactions less than the Swiss franc. So think about this. Switzerland has 8.5 million people. China, 1.4 billion. The Chinese yuan is used less in international settlements than the Swiss franc. They have a lot of growing to do because they may not trust us, the rest of the globe, but they sure as heck don't trust China. So while, yes, they're going to put together this cryptocurrency or this brick currency, that's going to take years. Don't worry about the dollar crashing right now. It's the least dirty shirt in the bin out of many other currencies. Did we weaponize it? Did we shoot ourselves in the foot? Yes. We did speed up the demise of the dollar. No doubt about it. What we did is we incentivized, we motivated the world with our display of how we could weaponize it against the Russians and every other country that, for whatever whim, we decided we were going to put sanctions on them for what? Because we could. We didn't agree with them. Now we pay the price. So the dollar, I'm worried that this is going to break out. So I forgot who said it earlier that I think it was Tom saying about gold under pressure. If the dollar breaks out here, yeah, you could see pressure on the gold stocks in particular, and yes, on gold. What you're looking at on this weekly chart is a doji star formation, a sign of indecision. I'm kind of surprised that it's up on the week, given the weak economic data and the pricing in of the probability of the Federal Reserve having to pause. So I'm surprised here. So despite all the naysayers on YouTube over the past several weeks, everybody's bearish on the dollar. You know what happens when I hear people so bearish on the dollar? I start getting a little bit worried. And maybe I'm too bearish on the dollar. And sure enough, we have a setup here for a breakout going into next week. What's getting ready to pull back? Euro, inside week. Yen may rally, though. Jody, I think we are devaluing our own dollar on purpose for manufacturing competition with China. Yeah. So if we devalue the dollar tomorrow, manufacturing is not coming back to the United States. It's not going to happen because you have the red tape of doing business here in the United States so exorbitant. It's crazy. Whereas you can go into Vietnam, Philippines. They welcome you with open arms and go to business. Do your business, and you're paying cheap wages. Mexico, same deal. So for the United States to become a manufacturing base, a manufacturing hub again, a lot of things need to happen. The first needs to be we need to need to eliminate our public education system. And that's going to take generations to get right. And we need to focus on basically, I saw a statistic on new immigrants to the United States yesterday. And if I can find the video, I'll share it out with you. And by far, the demographic that succeeds most in the United States are Indian, Indian immigrants to the United States, because they focus on STEM degrees. So that's, I forget what STEM stands for, basically engineering degrees, medical degrees. If you're going to go to school, when you get out, you're going to make money. You're going to pay off that debt pretty easily. And they don't take on debt. They're smart. They're smart. The second tier of, and the medium income is about $65,000. That is of white people. It's about $117 for Indians. Right below there are Taiwanese, Chinese. Then below that, you have mainland Chinese. Below that, you have Japanese. Is there anyone else in between? Maybe another one. But it all comes down to culture, tradition, education. And I don't know what people are talking about, the white privilege here, because we're getting our asses whipped. People out there better wake up, get off the video games and get to work, because you got competition in, and they're only making the country better. I'll tell you that right now. Thank God for them. All right. So, oh, and by the way, and going back to Jody, I don't want to be dismissive of your comment. If we did do that, if we did focus on improving our education base, that means more educated people. It means that you have more competition for those jobs, making wages more affordable. If you have a friendly government with a strong military, you pay a premium for that. If you have the rule of law, which apparently is dead here in the United States, companies pay a premium for that. You need resolutions to disputes. You don't get that over in China. You'd be lucky if you're a company, you have money over there, you want to get it out, you can't get it out. Talk to Ray Dalio. He can't get his money out. So I think it's Ray Dalio. Or is it Ken Griffin? One of those two big fund managers can't get the money out of China. So beware these so-called great manufacturing hubs, because when you want to withdraw, you may not be able to. Whereas the United States, you can. So we need less regulation, less taxes, and better education and infrastructure. All right. Dow Transports breakout on the week. Volume light. So they're up on the week. They were looking good yesterday. Let's see how they did today in the face of a weak market. They were up again today, but topping action at resistance, closing back down below 50-day moving average. Volume was up, though. Good. Weekly view, Dow Jones. There's no reason when I look at these charts, I ask myself, do I want to buy? Do I want to short? I don't want to do anything. I want to sell premium. That's all. I want to generate cash flow. I want to be neutral. We broke down today on the Dow Transports. I was looking for a breakout last night, and this is what I mean. Like you can have a hunch of what's going to happen. In this case here, the hunch was that we would get a breakout out of this wedge formation, but the reality is that we broke down. Technical analysis is about probabilities, not crystal ball reading. So I did warn about the Stokes being overbought, and we now have resolution. S&P 500 weekly chart, doji star formation on the week. Daily view. A doji star formation is a sign of indecision. One of my top 5 favorite candlestick patterns, link below to my 5-part video tutorial. Daily view, not looking good here. Volume rose, but still below average. Let's go to a 30-minute chart. And this is what we do on Saturdays. Take a look at the 30-minute views for setups. Good close today on the S&Ps, but I think that's short covering. Now, what we've been focused on are the Qs. We've been shorting in and out. We still have a short position on our main portfolio, but we on the option side, I've been trading SQQQ long. That's a leveraged ETF, putting you short of Qs. Therefore, it's bearish bets, and we've been doing well. So we booked profits today in the morning near the lows, but unfortunately, they rolled back over and closed lower. I was hoping for a higher close. Now, why I can't short, let's go back to this chart here. Why I can't short the weekly chart yet is because we're holding weekly support. I can't get big here to the short side. I could speculate, but you can't get big because we could easily break out. Now, the banks earlier, we went over this chart to a certain extent. What I want to point out here on this chart and why I want to short the banks is that we are in a very tight ascending wedge formation. I've been here before, most recently with NVIDIA. Let's walk down memory lane for a moment. NVIDIA, which was very, very strong, we stalked several times to the short side. Same chart as to what you're seeing on the banks. A rising wedge formation. Now, NVIDIA broke. We were short. We booked our profits, and now we moved to the sidelines, and we'll look to trade it again. But right now, it's an okay chart, possibly to get long of, but I wouldn't short it yet. Maybe we'll reshort it again. Not quite sure. But I think the same thing is going to happen here with the banks. The problem is if the banks go, the market probably rolls over along with it. So be careful. Seems like the BRICS is offering an alternative to SWIFT, and what currencies actually use is kind of a side note. Yeah, but the BRICS aren't going to be an alternative to SWIFT for a very, very long time. Not a long time. And don't forget, you have a $3 trillion derivatives market. Guess what that's based on? US dollar. So the dollar's not going away anywhere anytime soon. It's going to go away. It's going to get replaced. I'm not going to argue that point, but it's not going to happen tomorrow. Rick, the SWIFT payment system needs Boeing 787 as collateral to complete with BICS. Our debts need to be paid off 395 years, assume 196 years. $1 million plane. Okay. All right, Tom. That's pretty deep stuff there. All right. All right, TZ. All right, let's continue on. Watch out for the banks, folks. Technology stalled out. Light volume, though. Can't short it. Semis. Continuation breakdown. I think the semis really need to rally here tomorrow. Let's see how they closed out the day. Not good. They really need a breakout very soon, or the semiconductors are in trouble. But here's what I think is going to happen. I do think that they are going to break out, especially if yields pull back. That's a bull flag setup until it's not. So, as I mentioned earlier, we are now long of Broadcom. That's one of our 30-minute chart club stocks from last week. We added more to it today. All right, moving on. We only have 10 minutes to go yet. Biotechs. We are long of biotechs, looking good. We're going to stay long. Consumer staples broke out on the week. They gave back a lot of real estate, but they broke out. Discretionary names stalled. Let's get rid of EDC. This is our emerging markets play. Now, emerging markets. So I mentioned earlier that we were positioned for what's happening in gold, silver, the mining stocks well over a year ago. And a couple of months ago, I began accumulating a position in EMXC. This is emerging markets, no China. If we go to war with China, every single emerging market fund that has China in it, and they're roughly 30% of these emerging market funds, they get a 30% haircut overnight. They get wiped out. Plus, the stocks in that emerging market funds go down as well because there's a war going on. So I prefer to stay away from China. And I think that what's going to happen here, going back to our longer term strategy of how we're going to survive this big sell-off that's going to come. And what I want to do is have enough capital on the sidelines so that when these emerging market stocks get taken to the woodshed with American equities, I want to be buying some American stocks, but I really want to be buying emerging markets because you could bet the next go around and the decline of American equities is going to be a bloodbath requiring a restructuring of society, even greater than the great financial crisis. I don't want anything to do with that. Nothing to do with it. I want to be in emerging markets where there's real growth, little debt, manufacturing. They build stuff. We got to buy it. That's where I want to be. The dollar will decline in value. That's a tax cut for emerging markets. That's where I want to be. So, am I going to add more right here, right now? No. Why? US dollar may be breaking out here in a moment. If it does, this goes down. Or the stock market may roll over here. If it does break down, this goes down. We want to keep our capital dry and keep it earning 5.5%. Not bad. Gold. Actually, I'm sorry, I skipped. Oil. Oil's taking it on the nose this week. We could be filling a gap here at the 20-period moving average. Daily view. Wow, what a nosedive. So think about this. We have economic data that is coming out really weak. Yet, petroleum draws have been getting reduced, been growing. Energy supplies are being reduced. And OPEC is cutting by 1.5 million barrels per day. Oil's going down. Why is that? It's because the economy's slowing. We're probably in recession. Even gasoline prices rolling over this week. And this could be bullish for equities. Gold, up on the week. We were lower, now higher. Bullish. Our gold mining plays, they're under pressure. Let's go to a daily chart. That's not a daily chart. Daily chart, try that again, Bob. All right. We're up today, but we reversed off the highs of the day. Folks, this is a perfect example of why I do not buy stocks when their daily Stokes are going the wrong direction. What's the wrong direction? They're declining. Rallies fade. You want momentum to be rising, not rolling over. Momentum's going the wrong direction. Have patience. If you want to get a part of this, sell puts. Sell puts, generate some cash flow. And have the shares assigned to you at a discount. Nugget, of which we are long. Another one, we're probably going to sell puts, but on the daily chart, we're going to get this right eventually. They were up today, faded, right? Stokes going the wrong direction. Silver weekly view went over this. We're down on the week, up on the day. Well, actually, down on the day. We're up yesterday. Yeah. So this may pull back. All right, let's do some chart requests. We're going to shut it down for the night. We will begin with, hold on a second. TZ Burton, India's population just surpassed China. Yes, I heard that. Yes. The day I signed on the BRICS, they use ounces, Tony. Okay. You don't want those metrics, huh? Dane, good evening to you. How would I play CrowdStrike? They have earnings coming up, don't they? Are you talking about earnings or in general? I think they're coming up very, very soon. All right. GMDA. Gamidia. Sounds like an STD. Gamidia sell. Well, shine my shoes. What a move, huh? What a move. But I wouldn't buy it. Not yet. I think what we need to do is wait for a breakout above monthly resistance in dash line. Not this one, this one. I know I spelled breakout wrong. I know what I mean. I got to fix it. OCD. Oh, my God. We don't want any sensitivity. And we're good. I mean, it's a beautiful chart, but it's also very, very extended. Where are RSI? Yeah, RSI is around, it's at $70, 70.35. This can go higher. Actually, this can go higher. A lot higher for a penny stock. So I like it. I think it goes higher. Nibble here, not much, and then buy the breakout on GMDA. Ultimately, there's going to be a profit-taking event. Buy the profit-taking. It'll be a bloodbath. Start nibbling down on that bloodbath. Sounds like they have a good product. Bank of America. They've already reported earnings. Weekly view, we have resistance above. I'd be a buyer on a breakout above 31.22, but I need to say this. Remember, we just went over the weekly chart of the banking sector, and the banking sector as a whole is not doing good. There's a reason. So I don't know whether or not there's another big bank out there that's going to take it on the kisser or what. but we have a lot of resistance here on Bank of America. And if those banks go, the XLF goes, this is not a bad looking chart, but Bank of America will go along with it. Daily view, interesting. I think this could be bought. I would use a stop loss right below 29.11. I think this could be bought. Nibble here, buy the breakout on a close above 30 spot 27 on a daily time frame. And your next resistance level is going to be 31.18. After that, 34.28. That would be a good trade. But remember the bank's weekly time frame, not looking good, very extended. You're very welcome, Jody. Franklin, have a great night, my friend. In general. Okay, Dane, CrowdStrike in general. We'll go over that one now. Jeff needs work. Is that wage work, Jeff? All right. CrowdStrike. I did not want to do that. We closed out the day at 130 on the button. All right. Let's get rid of RSI. I happen to like this company, which is one of the reasons why I'm spending so much time on it. Yeah. All right. So what I want to point out here, and we'll go back to TrendSpider in a moment. And for those folks just joining in, TrendSpider is an awesome, awesome trading software. I use it constantly. But I'm a stochastic junkie, and I'm so used to stockcharts.com that sometimes I go back and I validate what I'm seeing here relative to here on Stokes. And we're going to talk about this in a moment. But I want to point out something. I need to adjust this really quick because this is important. I want you to think about what we're just talking about with the gold mining stocks. Stokes down below 50, rallies tend to fade. So what you're looking at here is a daily chart that is under pressure. Now, I'm going to make the assumption that you're a swing trader like me, multi-day to multi-week trades. So, the stochastics are very long in the tooth. We've had a heck of a rally off the lows. This is not a broken chart, but your momentum is waning here on a daily time frame. I'm sure that if you look at it on a weekly time frame, yeah, it's extended, but this could easily hook up. In terms of the monthly view, we have resistance immediately above, but we have support below. On the week, we broke out last week. We are holding support. We have moving averages immediately below, and they are rising, bullish. Volume on the week. It's a down week, but all down weeks are not made equal. This is not a good candlestick. In fact, I would argue it is horrible. But what if I said it's necessary? It's necessary for this stock to move up higher. Why might that be? It's a retest, a possible retest. We broke out here, and now we're doing a retest to see whether or not what was resistance back here, and we broke out, did a retest, and failed to hold. The same thing is happening again. And the way I'm confident, the reason why I'm so confident is that volume is very, very light. If volume were very heavy this week, I'd be a lot more bearish on the stock overall. But it's not heavy down volume. That leads me to believe that there's going to be enough defenders at these support levels, whether they're defending the breakout point, whether they're defending either one of the two moving averages immediately below, whatever. There's enough buyers down there to defend this level to say, okay, on a daily chart, the Stokes aren't looking good. What do the Stokes mean? We're losing momentum. We may go lower. Who cares? It's not a big deal. There's always an alternative. I happen to like the setup. I just don't like it short term. So what's the shot? I'd be long here, but I would not pay retail. No way would I pay retail. What I would do is I would look to the options market. Sorry about that noise. And the options market, let's see how expensive the options are. They're not very expensive, which is what we like to sell. You could still sell them, but it's just not a good candidate for cash flow strategy. It's good if you want to sell premium and get a discount, get paid while you wait for it to come down to your price target. So let's say we did this. Let's use a 1 standard deviation put. And you could go out, let's say, 30 days. That is May the 26th, 5/26. So we go back, 5/26. Market makers are expecting a 14-point move between now and expiration on 5/26. The shares closed out the day today at around 130. Now, daily chart is weak, but it looks as though we're at support levels. So what I would look to do here is I would look to sell a 1 standard deviation put. 112. Let's see what that would pay you. Not horrible. The shares closed today at 129.89. If you sold that put going out into May, it would pay you, the bid ask is 1.26 to 1.47. Midpoint, I would put my offer in. These are not highly liquid markets. You probably have to pay, probably have to accept a couple of pennies above the midpoint, but you'll get filled. And you'll get paid, let's say, $1.35. So your basis cost, if assigned, would be $1.12 minus $1.35. You do the math. I'm not that smart. So that's one way to play this. If you really want the shares, be more aggressive. You could sell a 120 put, get paid, say, $2.82, and sell puts that way. And if they're assigned to you at 120 per share, you get a $2.80 discount code. You know what I mean? If you want to put insurance on that, you could sell a 120 and buy a 108, 110 put immediately below. That gives you an insurance policy. It also reduces the buying power necessary to put that trade on, because now you've capped your max loss. So actually, you made it a defined risk trade, not really an undefined risk trade. It's not really capping you. It will cap your max loss, but I'm getting into semantics here. That's the way I would play this. I wouldn't buy it right now. I'd sell puts. And I have to love the company to do it, because you're not getting paid a lot of premium. They're not expensive options. All right, we're over here, 7:12. I'm going to finish off with work, and we're going to call it a night. You F that up, Bob. All right. It's a recovery play. The weekly chart looks okay. Now they killed it. Now they're reverting it to the mean. That's all. You're in a rising wedge formation. You're welcome, TZ Burton. You know, I don't love it. I wouldn't go buying this unless there was a catalyst. Let's check the options market, see what's going on there. You could sell premium here. Ivy rank or Ivy percentile 32%. I would do that trade. I'm going to add that to the list, Larry. Or Jeff. I forget who said that. I think it was Jeff. 32%. We'll look into that. That's the shot. I wouldn't buy the common stock. I'm not enamored with it. However, premiums are nice, and I might, depending upon how the markets are, how wide they are, I might put on an options trade. We're at 31 bucks, and at the money is around 30. They're pretty wide spreads here. So you're going to have to fish around to get an execution. I would not go big, just in case you have to get out of the trade. But I would trade the options here. All right, folks. Jeff, have a great night. Everybody, have a great night. Jody, have a great night. Smash the like button. Subscribe. Sorry about my voice tonight, folks. Everybody have a profitable trading day tomorrow and an awesome weekend. I'll talk to you soon.